Coinbase just can't seem to stay out of the headlines. They're always up to something, from the Wells notice from the SEC to saying that they're going to sue the SEC to now being sued for some sort of insider trading stuff. So they're always in the headlines, but just never for anything good, which maybe they're taking the approach of all publicity is good publicity, right? But something tells me that might not be the case. But now we do have this new kind of insider thing going on with Coinbase. You can see right here, Coinbase insider sued for dumping stock, saving $1 billion. So basically, the kind of things that they did was people like Brian Armstrong, the board members, CFOs, CPOs, all these guys kind of sold stocks or sold their stock knowing that bad information was going to come out, but they made the money while the stock was good because they knew it was going to affect the stock in a bad way. See, part of it was the way they went public here, saying the company's board deployed a so-called direct listing instead of a more typical initial public offering or IPO, and rapidly sold off $2.9 billion of stock before Coinbase management later revealed material negative information that destroyed market optimism from the company's first quarterly earnings release forward, which then led to within 5 weeks, those shares declined in value by over $1 billion, and Coinbase's market capitalization plummeted by more than $37 billion. So these guys obviously knew that there was some bad information coming out, or at least it's being alleged that they knew that some bad information was coming out that wasn't going to put Coinbase in the best light, but they still went off. They sold almost $3 billion worth of stock, put it into their own pockets, and then came out with the news and said, guys, Coinbase, we're struggling. And it went on to what they would have lost $1 billion from what they sold. And then Coinbase overall lost $37 billion in market cap. And even if we just look at Coinbase stock, you can see they direct listed whatever they said. They didn't do the IPO, but they went on the stock market through some direct listing thing. You see it spiked up, obviously, day one, and then cratered after, and then came right back up to about where it spiked up before absolutely falling off a cliff. I mean, even from their IPO price here of 250, they're down 80%. Like, Coinbase hasn't been great. A lot of people, I would have been optimistic on Coinbase when they first IPO'd, being one of the biggest exchanges in the world, the biggest one in the US. It seemed like they had all the regulatory people on their side. They were trying to do everything by the books, but now they're at war with the SEC. They're suing everything. People are suing them. The whole company seems to be like crumbling down. And obviously, when you have a stock chart like this, it's a lot harder to justify the CEO and board members and all the chief officers selling stocks when the stock's down 80% and they were selling, making billions of dollars. It doesn't look too great. When you have the CEO and all the board members and chiefs and all of these C-suite guys, they're supposed to believe in the company, right? Especially Brian Armstrong, the founder. He's supposed to believe more than anybody else. But he was dumping those bags and putting money in his pocket. And we can also see kind of more of the numbers for Brian Armstrong and one of their biggest firms, I think, here. Saying Armstrong sold about $291 million of Coinbase stock as part of the direct listing. And Andreessen's venture capital firm dumped $118 million worth of the stock. So these guys obviously made hundreds of millions of dollars off of this direct listing thing before the thing actually fell hard, and they would have lost tons of money. They actually made tons of money. But Coinbase responds to this saying, as the most popular and only publicly traded crypto exchange in the US, we are at times the target of frivolous litigation. This is an example of one of those meritless claims. I mean, it could be right? It could absolutely be right, and they could have done none of this stuff, but I would say it always looks bad when the CEO and founder is selling shares and eager to get out. Even if he's just pulling hundreds of millions of dollars or billions of dollars off the table, it's just not a really good sign overall. Like, if you believe in your company, you're going to sell some stock, you got to live and everything, but you're going to keep the majority, right? You're not going to continuously sell. But I mean, Brian Armstrong kind of been doing that. And it lists out, a bunch of people that sold stock or saying they got ill-gotten gains here, saying the derivative complaint filed on the company's behalf seeks the return of ill-gotten gains from Armstrong, Andreessen, the president, the chief financial officer, chief accounting officer, the chief product officer, and a bunch of board members. So there's a lot of people in this that are being alleged that they got ill-gotten gains. Now, it's probably going to be an extremely hard thing to prove, right? Because of the way that they went public. But either way, it's just not a good look, right? It's not good news for Coinbase. It's not a good headline for Coinbase, especially in a time where they are being sued or being gone after by the SEC, and they're saying they're suing the SEC, and they're in this whole battle thing. It's just, it's a ton of negative stuff coming out for Coinbase, one after another. But you do also have to take this with a grain of salt, right? This whole legal suing lawsuit thing that's going on right now, because it isn't from regulators, it's from like a normal person or a shareholder or something. You can see right here, it says the fact that this case is being brought by a plaintiff's firm, not securities regulators, may also suggest there's less here than meets the eye. So obviously this could be nothing, right? It could just be someone who wants to sue, thinks they might be able to get something, and kind of going down that route. But it still doesn't look good. Even if nothing comes of this and they win this lawsuit and stuff, it still doesn't look good that they were selling their shares. They, sold shares before really bad news came out. They're making all this money. They're making hundreds of millions, the billions of dollars selling shares right before bad news they know is going to comes out. And it is crazy to see the story of Coinbase really play out from when they launched, all the optimism and love that they had. It should have been, I think Jim Cramer was real happy about Coinbase and bullish on Coinbase, which should have been the telltale sign that, something was going to go drastically wrong. And they've been a victim of the Jim Cramer curse now, but Cathie Woods loved them. She probably still holds tons of Coinbase stock. It's a lot of people went there and went down the path of, if you can't buy the gold, or sell the shovels, like that type of thing, saying you can't pick the right crypto that's going to go up. So just buy the casino that provides them all, because the casino is going to make money regardless of what crypto does good. And obviously the people that took that strategy, the stock didn't really do that great. But Coinbase in the news again, nothing good. They're going through it down there. And you got to say, Brian Armstrong being a founder CEO should speak more volumes when he's selling boatloads of shares, because he should be the last person to want to sell, because this is his company. He created it, built it from the ground up. He should be the person who wants to see this succeed the most, who has the most amount of belief into it. And he probably shouldn't be selling so much stock. And, when he's doing that, it's probably a bad sign. That's going to do it for this video. As always, don't forget to smash that button and subscribe. And I'll see you guys in my next video.